What's good, everybody? Marie, I just want to show some love on. Let me get this off. So I just wanted to break down this chart real quick. Currently on Nas, I wanted to show you guys a little bit of how I am trading currently, the things that I'm looking for. I think I haven't posted a video in over a year, but I told myself once I get off this deployment that I was going to drop a video, and I think the time is now. So I think I want to break down this chart real quick. Really don't really trade nice. Let's go to US 30 real quick. Trade US 30 every single day, but not every day. If the trade setup is there, I'm usually on it every day. It's been sloppy though. Let's go back to Nas. I'm gonna show you the strategy on Nas. But basically today I just wanted to talk to you guys about some of the stuff that I'm looking for, how to basically point out some of the directions, some of these big time traders that you see making a lot of profit. They are great at knowing the higher time frame analysis. And today I'm going to just break that down of how to have the overall bias and how to take a great quality trade setup versus trying to intraday trade every single day, right? So if you're a new trader, stick around, watch the video. I advise you to go back, but watch this video as well because it can change your overall perspective when it comes to just charting, watching candlesticks, knowing the overall bias. So, like I said, I do these videos for free on YouTube for you guys to have an edge and for myself just to see the growth of where I started. And like I said, I really haven't had a mentor. I lost and made profits, lost, made profits, lost, made profits, and basically journaled my losses and journaled some of my good wins and learn from experience basically. There is some traders who have watched and seen how they trade, but at the end of the day, trading is based on what you see, what you know, and basically your experience when it comes to trading every day. So uh, content that I'm going to drop down is very useful if you want to take it. If you don't, hey, it's up to you. But yeah, I just want to give back, to those who are in a process of learning how to chart, how to grow, and basically making sure you guys know more of how to utilize these higher time frames. So let's move on. Last thing I said was basically utilizing the higher time frame. So I'm gonna break this stuff down to you, but at the same time, I'm not gonna go super super deep in details because this video will be 3 hours long. I spend a total of at least 3 hours on the charts every single day, so I don't want to do that now. I just want to break down some stuff that I use, what I look for, and how I try to like take more of a quality trade versus trying to trade every day. So moving forward, the first thing that I want to do is know the bias. How I know the bias is based off the higher time frames. I have a theory, right? And this is just from what I see and what I've learned. I think I discussed it on some of the previous videos. Basically, it's this. Whenever you have a bullish candlestick, right, it's usually followed by a bullish candlestick. So say, for instance, we're looking at this bullish, it's usually followed by bullish. Or if you're looking at bearish, it's usually followed by bearish. What happens? We got a bearish candlestick here. The current one, say for instance, if it was May, February, looks like it's February at the bottom. So say for instance, if January ended bearish, I knew during the month of February, I should be leaning more towards sales, right? Because usually, as far as candlestick analysis, usually if the previous is bullish, the next one go bullish, or if it's bearish, the next one go bearish. If it's bullish, the next one go bullish, 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 bullish. When it's bearish, bearish, bearish. Like so, if the previous month was bullish, I'm usually looking for buys the next day. Let's look at some of the current data, right? So as far as Nas, we had bullish, 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 right? So to be trying to sell when the previous month was bullish is really kind of going against the trend, if that makes sense. This is important for new traders as well. If you are watching, don't trade against the trend. If anything, trade with the trend as far as knowing what the previous candlestick was, right? And it's the same thing for bearish as well. We got this big bearish, which was followed by bearish, followed by bearish. This is a lot of moves, right? And and another thing that happens too is usually, so we got the bearish candlestick, the current one, we usually go back inside the body. Oh shoot. It will usually go back inside the body, right? You see this long wick, find an area of resistance. Why? Because the previous was bearish. So we know we have to pull back, right? Find an area of resistance. And once we find that area of resistance, we can basically now hold this trade, breaking the low of the previous monthly, right? This is basically what it's going to look like, but I'm going to break it down to how to ride that trend on smaller time frames, if that makes sense. But I do want you guys to think about that before you even enter the market. It can be on a weekly as well. It looks good on weekly. Let's look at it real quick before I move on. Once you got the bullish, it's followed by bullish, followed by bullish. You got bearish. This is a lot of consolidation. But once we broke out at consolidation, we got bullish, 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 bullish. And what is happening? It's going back inside the body. Oh, shoot. It's going back inside the body, back inside the body, back inside the body, back inside the body. And I would say up here is when it just like took off. It's a lot of news dropping and it's gapping. So, but I just want you to get in the mind frame and just looking at the previous. You can do it on any of these three, right? You got daily, you got weekly, and then you got monthly. The higher the time frame, the better. But I'm gonna show you. You might be like, oh, monthly is gonna take too long. No, I'm gonna show you how to take more of a quality trade setup using the monthly and even in 3 months. So the second thing as far as overall direction is this 21 moving average. Let me click it. 21 moving average, which is exponential, right? And it's open. Why do I use it? It just helps with overall direction. A lot of people do say, well, real quick, why is it open? It doesn't matter if it's open or closed. I don't use anything outside of open and close. I don't use it. So even if I put it on close, watch the moving average. It barely moves. Watch it. I'm gonna click OK. Barely move. You know what I'm saying? So it really doesn't matter if it's open or closed. I keep it up. I keep mine on open because it's slightly smoother, right? But it really doesn't matter. So this is 21 moving average. I use this more for the daily, right? You see, once we were above this 21 moving average, we usually flow above it. For the rest of this month, it was just flowing above it. So I know I should be looking for buys, buys. Yeah, we got some bearish candlestick for buys, right? Let's go back and look at some of this. We had a pullback to the 21 moving average and just buy, right? Even if we look at some of the sales for this month of, what is this, August, we started up under it. So yeah, it pulled back. All it did, and this is what I'm showing you, like, let's look at the month of August, right? This is the month of August, my fault. Let's look at what happened in September. It was a bearish candlestick during the month of August. It pulled back inside the body of August for September. And then what happened to the rest of September? It fell, right? Breaking the low of August. It pulled back inside the body of August. Look down here, August, September, pulled back inside the body of August. And then what happened? Found an area of resistance because the previous month, let's look at it on a monthly. This was that monthly August, right? So now if we look at September, we know we want to sell, but now it's just a matter of finding support and resistance. And I use, my Fibonacci as well, just to find some of these areas. It's basically a gimme, but basically I want you to think about that and the overall direction and the overall flow. Once we start to break up under this 21 moving average, we know sales is going to, take off. This is a lot of pips, over 100,000 pips. So now we just know, what have I talked about? We talked about the overall previous candlestick, paying attention to the previous candlestick. We talked about the 21 moving average, which looks great when looking for the overall direction. I like to use it on daily, H1. Let's look at it on H1 because I haven't discussed it on H1. But yeah, daily, H1 and M5 basically is how I use this 21 moving average. And I usually during the open of New York, once we get up under it, then I flow with it, right? Don't go against it. go up under it, flow with it. Once we get above it, flow with it. Look how long we could have been just floating with this 21 moving average until we had this big spike. But once we are up under it, flow with it, above it, you'll get some choppiness going on. It's never perfect. If it was perfect, we'd all be making millions. But yeah, I use this 21 moving average for a sense of direction, right? So I use it on a daily, H1 and M5. All right, so the strategy itself is kind of knowing some important information that I've learned since I've been out here on this deployment. And that information is this, man. You know how I just broke down the monthly as far as one candlestick. Let's think on a super higher level more than the monthly. Yeah, you can say 2 months, but let's break down 1 year, right? If we break down a year, we can divide that by either 3 or 4. 4 is probably too much, but we can divide it by 3, right? Because we want to catch trades in between these the 3 months. So let's look at it. So we got January, February, March. That's 3. Then we got April, May, June. That's 3. July, August, September. That's 3. August, what did I say? July, August, September, October, November, December. 3, right? So it's 12 divided by 3, just give us 4 different sessions or whatever you want to call it, dividers, or let's just think of it as far as a chart time. So I think on trading view, traders view, you were able to see like the actual 3 months chart, right? On MT4 or MT5, it only goes up to monthly, right? But let's just break it down ourselves. So we know the first month of the year is what? Is January. So let's move this out the way. So we can start on January. Boom. And then we go 3 months out. So January, February, March, and then at the end of March, boom. So we know all this information is based off of all this information right here makes up one big candle. And let's look at it. It opened up somewhere around here and it closed all the way up here. So if we was looking at it on basically a time frame, if we had one on MT4, we would say that this candlestick was bullish, right? We have the high of those last 3 months, and then we have the low of those last 3 months, right? Let me zoom in. So we have the high of those last 3 months. Shoot. The high of these last 3 months, and we have the low, which is here, of the last 3 months. We don't really need this. So let's delete this real quick. So now that we have the high, which is up here, and the low, what do I do next? I basically want to go to the weekly, and this is important. I'm doing this on a daily. I'm finding the highs and the low from January, February, March, right? Because I'm looking for trades during April, May, June. And then when July hit, July will be based off of April, May, June. So right now we're still in the month of June. So I want to be taking trades based off of January, February, March. So we have the high, we have the low, right? And this is important, right? You will want to go to the weekly. And when you go to the weekly, you still want to lock in with that move this out the way because it kind of looks ugly. You see how we had that long wick and we still got the same high. When you are on this weekly, after finding the high and the low on the daily, you want to find the lowest closing point, right? So this is the lowest closing point out of those 3 months. So we can mark it off. I don't really like marking it, but I'm gonna mark it for now. And then we want to find the highest closing point as well, which the highest closing point is actually the actual high, right? because that's the highest point and it actually closed right here. This doesn't count because it starts April, right? So April doesn't count. This bearish candlestick is what I'm talking about. So it'll be this last bullish. So the high and the highest close are on the same mark. So it really doesn't matter. We can just keep that there. And let me change this color because I don't want to confuse you. Let's make it orange or something. Now I'm gonna go back to the daily. And I'm gonna slide this over back to January, zoom out just a little bit, put this back on April. So now we know that on the weekly, this orange is our lowest closing point. And then the highest closing point and the high of the last 3 months, January, February, March, is the same, right? So now I hope everyone who's watching this know how to use the fib. I don't want you to truly rely on the fib, but the fib helps a little bit when it comes to just taking good trades and making sure it's pulling back before entering the market, right? So what I like to do is place my fib. I don't go wick to wick, right? Wick to wick will be like here, highest point to the lowest point. It depends, but for this strategy that I'm showing you, I don't do that. I go from the lowest closing point to the highest closing point. I'm not saying that the lowest low, which is down here, the blue, doesn't matter. It does matter because it made a low there. So I do have to mark that off with this blue, but I want to focus in on the lowest low when it comes to the weekly. So this is just a strategy that I know, bro. I'm not trying to tell you how to trade. I'm showing you how I trade and how I take good quality trade setup. So if you do use the low, it is what it is. This is how I'm looking for trades. I'm not trying. This is a disclaimer too. I'm not telling you how to trade. It's just how I'm trading. So basically, we got the highest close. We got the lowest close from the last 3 months. And since this is important right now too, because we know that if we was looking at these last 3 months as just one big candle, we open here and we close all the way up there, which means we went bullish. So now I know that I'm looking to what? Buy the market for April, May, and June, most likely. And we can see it. I mean, it already happened. Yes, it already happened. Hopefully, later on I'll be able to trade this live to show you guys. But I'm just showing a strategy now. I'm not really trying to take a trade now. I'm showing you what I'm looking for, some of the knowledge that I've gained these last 3 months been on deployment. So if you understand the Fibonacci, we know that it closed here. We have to basically pull back inside the body as well. Remember, let me highlight it a little bit. Let's look at this as a bullish candle, or let's keep it blue since my candles right now. I'm gonna make it light blue or something. I don't want to confuse everybody. So let's look at this as a one big bullish candle. We know that we want to pull back inside the body of this bullish candle, find an area of support, right? It can be either the 23, 38, 50, or 61.8. If it started to break up under the 61.8, also, I mean, I know structure based off of previous experience. We know that the trend most likely change if it pushed past this 61.8, right? But we want to see it push to one of these levels first before it actually go to our TP area, which would be negative 27 extension, right? So I can highlight that TP area. Overall, that's our TP area for this month, if that makes sense. It could be this month, it can get hit within 2 months. Basically, I'm showing you everything on a super higher time frame. So that's our overall goal to get to. We want to see it pull back, and once it find an area of support wherever it may go, we want to see it get to there, right? So this is important when it comes to trading this strategy. This is where a lot of people talk about psychology. We know as someone who's been using the fib for a long period of time, we have to pull back to at least the 23. Does it have to get back to the 23? No. You can go back and look at, the daily and say, okay, we had resistance, 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 and kind of broke, right here. Once it broke with this bullish candlestick, you could have been treating it like that. But I don't like trading like that. I'm more of a simple person. I need to see more of a line or this and that, on smaller time frames before I can actually, start taking these trades. Because me, I would have been trying to like enter right here, been nervous, especially at 21. Well, I mean, not enter. I would have missed it because I would have been like more of, oh no, it got to come back and touch here, or it got to touch the body, whatever it may be. So what I like to do is kind of split this super big Fibonacci up. Let me delete this because I don't want to confuse it. I like to split it up into quarters, or not quarters, but halves, right? And this is important too. If you trade in on your phone, you're not going to be able to do this. You need a laptop to be able. This is art. This is art. You need if trading is going to be your craft, you need to basically invest into a laptop to be able to do this stuff. So basically, I want to split this Fibonacci into halves. All I do is go grab another Fibonacci and I will do this, pull it out. And I go from that big Fibonacci 0, 0, right? Hold on. See how it says 0, 0 over here? That's the high. Remember the highest closing point? All I'm doing is grabbing another fib, putting on that 0, 0, and I'm going down to the first next level, which would be the 23. And once we got that, enter Fibonacci on top of this super large Fibonacci. It might sound crazy, but it works. Like I said, this is how I trade. I want to find the half mark, which is the 50. Could I have eyeballed it and done it? Yes, because I've done it many a times. I became used to it. But I'm showing you guys a strategy. Stick around, take notes. So what I do is pull it. Let's look at it again. So from 0 to 23, I go grab another Fibonacci and I pull it down. Why do I do that? Because there are moves in between this area. Yes, we know we have to pull back as far as looking at it on a super big time frame, which is the last 3 months we had a bullish. So yes, we know let's delete the center. We know we have to pull back at least to the 23. But before we even get to that 23, we know that the first halfway mark will be this purple. And where do we get that purple? From another fib drawn from the 0 to the 23. And had the market pushed down, all I do is just I call it trend tracks, boom, just flip it. So we had it on 0, 0 over here. It was already on the 23 at the bottom. So all I do is just go down to the next 38, right? And boom. So the 38 will be here if I move it out the way. And all I do is put another purple line, the 50. Keep going down. You can do this all day. I just want I want everybody to get in the mode of thinking like this, right? And we are doing this on a daily because we want to catch some of this intraday trades in between these zones, right? So we place it at the 50. I'm gonna do one more. Boom. Even though we didn't get all the way down there, I'm just showing you how I train track it. Boom. So now I can delete these. Now we know that these purple lines are the in-between halfway marks of the big overall fit. So now that I have it plotted on a daily, I can now go down. But pay attention, pay attention, pay attention. I'm gonna say this before we go down. We knew that the last 3 months was bullish. Blue. You see the blue candlesticks? It was bullish. Think of it like that. You want to see a pullback. We have a fib, which is giving you is a giveaway, right? We want to see a pullback to at least the 23. So I know when April starts, I want to start, kind of most likely selling just to get back to the 23, since we were looking at it on a super higher time frame, right? And then I know eventually once we start to get some support, probably here at this 23, or it could be at this halfway mark, I would kind of like want to start buying, because I know the overall bias is to buy because our last 3 months was what? Bullish. Let me get this right real quick. I hate fooling with this. I'll turn it off. All right, so let's scale down on a smaller time frame. I'm gonna highlight this high, right? Because I know once we start to break up on it, it's free game to start selling. to get to the 23. Sure, I got this 23. Cool. So now let's go to H4. So for me, I'm not gonna lie. If I seen that we closed up here almost near the high, I would probably want to see this high get taken out. And then once it pushed back down, like something like this, wick back inside the body, then I would basically want to take that sell to try to get back to the 23, right? During this day, put it like this. I'm gonna be honest. Why take any of these trades in between these areas when we know it has to get from here to go to there? Why not just wait on this opportunity where we push and then I'll show you in smaller time frames. Take this out and just ride it for thousands and thousands of pips, 25,000 pips, right? Why fool around in this week when we're not even at the 23 and we're not at the zero? Okay, this next week, we actually pull back to the zero again. I would much rather lose, right? Even if I take this trade and win or lose, whatever it may be, I would much rather take this trade right here and sell it because we haven't got to the 23 versus trying to take sales in between this area, right? Let's just wait on these opportunities, which is here and here, right? To take more of a good quality trade setup. And it comes with trading psychology as well, because we know as far as looking at the last 3 months, it was bullish. We know we have to pull back inside the body. The Fibonacci just helps with that overall sense of direction. We haven't made it to the 23. So once we did pull back to the zero, we haven't made it to the 23. It came close down here, right? As close as possible, right? But like overall, we haven't came back in this area, right? It's never truly perfect. It's an area, but we most likely have to get close to that area. This is not close enough. That's close enough, right? So when we did pull back on H4, I'm taking another sell, right? Selling up here, selling up there. And even let's look at it on the daily again. Even after, pushing back down here, and you see what happened is skyrocket back up, skyrocketing back up, even closing above our zero when it comes to our high from the last 3 weeks, which is good because we overall want to be buying, right? We already said that this negative 27 extension was our overall target area. We know that during the time of the start of April that we want to get back to the 23 first, at least allow the 23 to show support. Even if you don't take these sales, I will either be waiting on this 23 to get touched, see how the market reacts, and once it starts to break, look at some of the moving averages on smaller time frames. I'll be trying to take the buy from here to the 27 extension. This right here came close enough. So once we do start to get this bullish momentum, I'm like, okay, during this time of May, I don't really want to be taking a sell anymore because this 23 showed support hella and even closed above our previous 3 months, right? So now what do we know? Look, think about it on a higher time frame. We open here, close there. We close. Think about it on a higher time frame, which would be the monthly. Let's just say that this one ended bullish too, which it did. If we was to zoom back out, it ended bullish too. What do we know has to most likely happen for the month of May? We usually have to pull back, right? Look at it, pull back inside the body. Think about it. These dailies, as far as like a bigger candlestick on a higher time frame, we pull back, and usually when we pull back, what it does, leave a wick. This will be the wick. And once we start to break back above that 3 months or even back above the highs of the previous month, we will want to see a slight pullback, right? Or even take the buy. You could have took buys all along this area, right? All along this area. All along this area. So we'll do what? Ride that buy to our 27 extension for 58,000 pips. And look how many days it took. 1 day, 2 days, 3 days, 4 days, 5 days, 6 days, 7 days. 7 days of not having to be on the charts just to ride it to our overall target. You know what I'm saying? This is going to help so many traders. And let's look at it on M4 or H4, my fault. H4. Remember I was talking about this 21 moving average. What do we do? Pull back to it. And when we pull back to it, yeah, it spiked a little down, like with this last wick. This wick here kind of with a little spike. It could have been news or whatnot, but like even if we had took the buy here and lost this trade, get in again, bro. Like if you're not using proper risk to reward, you shouldn't even be trading. Why risk it all right there at only one time? If you lose this, spike down, whatever. As soon as it start to break back above it, take the buy again, and now we can just ride it, right? Took probably 2 weeks or whatnot, like 7 days, whatever it may be, but it's worth it. That's a that's a good quality trade setup. And all it's doing is just pushing higher, is creating what? Higher low, higher low, higher lows. And then eventually it got to our target area, right? Boom. Now that we understand a little bit about how to match the higher time frames with the lower time frames, I want to show you about some of the entries and how to enter like some of these trades. And this took me a minute, and I'm not gonna lie, I just basically figured this out not too long ago. Like I'll say, like a couple weeks, like 3 or 4 weeks ago. So now that we know, let's go back. Let's look at the daily again. So April started, right? This was the high. We know what we want to pull back inside the body. So April started up here. We want to pull back inside the body, at least going back to the halfway mark, or at least back to the 23 mark, right? Most likely the 23 mark. So when we were playing around this quality trade setup area, which would be our 0, 0, we want to kind of like go down to what was it? I like to do it on M30, right? Zoom out, bro. M30. And then I'm finna show you, I'm finna show you some stuff, bro. All right. So pay attention to this. Take notes, take notes, take notes. First of all, look at this Monday, right? This is where my purple will line. So this is a Monday. This is that Sunday, whatever, Sunday, 5 p.m., whatever, Eastern time. But like, let's look at this day right here. We not trading this day. Why not? Because I just spoke to you guys about how to take more of a quality trade setup. Are we at the 0, 0? No. This is how like knowing bigger, higher time frame analysis. Are we at the 0, 0? No. Why risk it in between there? Look, it looks ugly. You see what happened? We was not up here at our mark. Why even try to risk or hurt your account trading in between there? Why not just wait on this area, this area, this area, right? I really don't even like really fooling around with the middle areas. I just use those more of a TP area, right? Could you take trades based off of that? Yeah, but it has to like align with some other stuff, which I'm going to show you right now in this area. So, but like, stop fooling around in between these areas, bro. Wait on this area. Look at that. During the time of NYC, hit this area, and what happened? Flow with the market, bro. Thousands of pips. TP, purple. 21,000 pips. All right, so let me move on. I don't want to be on here all day. All right, so look. So now when we do get in that area, we actually pushed back above, came back down. This is like I said earlier, trading psychology. When we go to the daily, we know as far as the 3 months, we want to pull back inside the body, which would be all of this blue. So it's a good quality sell that we can be thinking about, right? But how do we enter that sell? I'm gonna show you. So what I like to do is to pay attention to pay attention to that 3 a.m. Eastern time candlestick up until 5 p.m. Eastern time candlestick on M30, right? 3 a.m. Eastern time to 5 p.m. Eastern time. 3 a.m. Eastern time on this chart would be 10 o'clock, right? That's 3 a.m. Eastern, if you didn't know already. 5 p.m. Eastern time is 12 o'clock. But I want to focus on what happened in between this 3 a.m. to 5 p.m. So what do? I will scoot this 10 a.m. back to 9:30 because I want to see what happened during that 3 a.m. And I want to see what happened after this 5 p.m., right? So I'll scoot it actually to 1300 because I want to see what happened during this 5 o'clock p.m., right? So now that I know that I want to lock in on just this information, I'm not true. And this is another thing, bro. I don't trade until 8 o'clock. So you see how it says 1500? I don't touch the market anymore until 8 o'clock has actually happened. While we're like, yes, this is a decent move, but we know that the volatile is going to go crazy when 8 o'clock, 8:30, 9:30, 10 o'clock, 11, 12. That's when the volatile hits, which is at 8 o'clock and beyond after. Don't be sitting here trying to trade during Asian session, during London. London, it would spike like this, but most likely it's going to get reversed or it's going to go all the way back to wherever you might have bought this. Say, for instance, they caught the buy, it's going to come back and hit that, take you out, right? Stop wasting time. Let's just wait until 8 o'clock, which is 1500 on my chart to trade, right? So I'm going to delete it for now. Let's go back to what I was just showing you. We want to lock on this information from that 3 a.m. to 3 a.m. to 5 a.m. Same stuff. I want to find the high of that 3 a.m. to 5 a.m., which would be here. This is the high, and I want to find the low. The low would be this candlestick here. So boom, boom. I'm only doing this stuff. It works every day. I ain't gonna say every day because like the day before, kind of consolidate. But majority of the time, you can do this on any other market. This stuff that I'm showing you, can do this on any other market, right? I'll call this strategy when we are at a big support and resistance area. I call it the three amigos. I got the bottom, I got the high, and I want to find that migo that's in there. And how I find that migo is this. I see which direction was this big push from the 3 a.m. to 5, basically to 6, basically the end of 6, or the end of 5, whatever you want to say, to 6 o'clock. It was more of a bullish push, right? So since it was bullish, and I'm doing this on M30, I want to find the last low of the closest bullish stick candle. Let me not confuse you. Let me change this color real quick. So I'm finding, what color have I not used? Green, 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 green. This is not straight. I want to find the last lower high, basically, which would be here. We have, if we go on small time frame, lower high, these wicks that's up under this bullish candlesticks are lower highs. Pushed up, create a lower high, pushed up, create a lower high, pushed up, create a lower high, pushed up. So I want to find the last lower high that's closest to our high between this time, which would be here. The three amigos, 1, 2, and the amigo, which is 3. That 3 gave us a big push, breaking above our, support and resistance area. But if you was to go down to M15, right? Do we have another? And I don't go lower than M15 really, unless I'm really going to enter the market. Do we have another lower high that's created within this last lower high on M30? Yes, we do. And that'll be this candlestick right here, right? It'll be this one right here. It created another last lower high, right? So I mark it. Boom. So now these are my support and resistance area that I want to play off of when we do come to the 0, right? I want to play in between these zones during a time of what, 8 o'clock a.m. Eastern time. So I don't want to trade until this time right here. Boom. And I know that we have to what? Sell to get where? Back to try to get closer to this 23, right? We have to push back inside the body. So overall, I'm already looking to sell. Right now, if you're looking at this moving average on M15, the 21 moving average is we above it. But if you go down to uh we still above it on the H1 as well. So let's look at it on M30. I mean M5. M5, it looks good. That's why I say I like to use the 21 moving average on M5. I like to use it on M5, H1, and daily. So during the time of 8 o'clock down here, right? We are around our area where we truly looking to try to sell back to where the 23 to push back inside the body, right? We could have been waiting on our amigo areas, right? This is this green line to get broken, right? So once our 8 a.m., which is here, once it start to break, we also start to even break up under our 21 moving average on M5 as well. Exponential doesn't matter. We start to break up under first before we even broke this line, right? So I probably, I mean, don't get me wrong. I'm very aggressive when it comes to trading, and this is nice. So I probably would have took it because I know 8 o'clock sometimes give us a big push versus waiting on the retest. You could have waited on this retest and took the sell right there, right, and try to ride it back down, which it would have been perfect. It even pushed further than it did previous one, right? But stick with me now. Stick with me. You could have got in this sell soon as it break this green, this first green, which that first green was what? Stick with me. Was the last lower low. I mean, it was the last lower high from this last bullish, right? That was inside our M30. All that's what I'm saying. Every candlestick makes up details on smaller time frames. That M30 that we're looking at right here, this bullish, is these two candlesticks right here put together. All right. So now this is the last lower higher low. I keep saying lower high. It's the last higher low, right? That we want to lock in on. Had you been looking at it on M15, it broke up under, but did it retest? No. So we don't even want to trade until it comes back and hit that, that last area from that higher low. I like to use M5, right? Because it gives you more details. So as soon as it start to break up under, I got two confirmations. We are up under the 21 moving average. We are up under the green. So soon as it broke up under this moving average, I'm kind of risky. I would have took the sell. And how this is, and this is important to pay attention to this. I like to use a certain risk to reward on Nas. I know that on Nas 100, anywhere from 2,500, right? 2,500, which is there, 2,503 till 3,000, like right there. Anywhere from 2,500 to 3,000 pips is a good level to use as far as risk to reward, as far as using this for a stop loss, right? So I will place my stop loss. I would take the entry there, place my stop loss 3,000 pips. And if I'm risking one, I don't take one-on-one trades. I would like you most likely, take out a 1 or 2. So if I'm risking 3,000 pips, I would want to see whatever pips, points, whatever it may be. Please don't get the comment on, oh, it's not pips, it's point, whatever. I'm reading off of MT4. It says 5,000 right there. So we risking 3,000 to gain 6,000. That's a good trade to me. You know what I'm saying? Let me pull it out just a little bit. Could have got more, right? All it did was go down and hit that last low, right? Remember, hit that last low from that 3 a.m. to 5, right? or not to 5 to 6, whatever, because we include five in the strategy. But all it did was push all the way back down and hit that last low. I like a 1 to 2. So if I'm going to risk 3,000, my TP would go for 6,000. That's a winning trade. We are also in our key area. Let me do this. We are also in our key area as far as higher time frame. So yes, you could have like just took the sell and rode it, trying to get back to the 23. But as for me, I learned something different every day. Like I'd rather just put on some big lots in good areas, catch a 1 or 2 and be done for the whole week versus trying to take, a trade and just experience that up and down, back and forth when it comes to, yeah, you could have took the sell and try to ride it to the 23 all the way down here, or you could have took the sell and rode it to what the halfway mark, which would be this purple, right? Remember those halfway marks that we drew up on that extra fib in between? So you could have took the sell from that area. Let me make this, I don't want to confuse anything. TP area. Could have took your sell, risking what, 3,000 or 2,500, which is decent. Boom. Took ourselves here. That he had another opportunity that you could have got in. Boom. And just rolled it down to our first TP area. That's a lot of pips. You would have been in this trade for almost a day, right? A day and a couple hours, bro. 26,000 pips. But you don't have to truly worry about the next day, right? You could have just been flowing, especially the next day. What I say about these next day? Not to trade unless we are aware at our key Fibonacci areas. So like, yes, it pushed off the bottom of previous 3 a.m., but it doesn't always happen like this. This is what it's going to look like during the time of opening. Okay, I would have been like, okay, are we at the 0? No. Are we at the 23? No. Like I said, I sometimes would probably take that entry. We could have took some buys, something like this, right? But I don't really like to trade at the halfway mark, which is the purple anyway. I'd rather take this setup, sell, and just let it flow. Let it flow. It's going to create lower lows and lower highs because it's pushing in a downtrend, right? Boom. Right. So that's a good quality trade setup. Do we get any more? Not really. Oh, here it is. Let's lock in on this one. Hold on, man. Let's lock in on it. Let me zoom out. This video is getting long too, so I might cut it short here soon. Give me 1 second. Give me 1 second. 1 second. All right. I'm back. So now, what are we talking about? Just taking good quality trade setups in our perfect area. So we took the sell over here. Let's delete some of this stuff now. We took that. Delete some of this. And this is another reason why I like trading. Me growing up, I was big into drawing and art. So all this candlesticks and colors and lines, it looks beautiful to me. So our first sell would have been here, somewhere inside this area, riding down to at least the halfway mark for 26,000 pips. Next day, we're not at our area. We could have been trying to play around there, but I don't really like fooling with it. I would rather like take a trade at the 0 or the 23, which is down here. So I wouldn't have been trading. I'm not even want to put risk on none of this, none of that, none of that. Oh, look, we're back in our area, especially during the time of London. So what do? Same stuff, right? Go right back to it. What do? Go to M30. Now that I'm on M30, right? I find our areas of, so this right now, you see how it says 10 a.m. We want to go to 9 because we want to see what 10 did. Boom. And we want to see what happened during 12. right? 12, which is 5 a.m. in the morning. So we put it on 6. Now I want to focus in on the high, which would be here, and I want to focus in on the low. Please don't ask me why I do that. It's just what I've seen. It works. So if it works for me, I'm just giving out free game, bro. You don't have to really do it if you don't want to. So I got the high. I got the low. And then we have the high, which is here. Boom. So we got 1, 2, and now we need that what? Last amigo, right? I call it the 3 amigos. And the last 3 amigos would be here based off the last lower high, right? That's the last low. I keep saying lower high. That's the last higher low because it was in the uptrend, right? If we lock in, it pushed all the way up. It was a bullish. That's the last higher low when it comes to this. So I want to put a line there. You can even like highlight it, right? Because we truly want to play around that area. If we go to M15, do we see another higher low that's bullish? Boom, before this purple got hit. No, it created a higher low, but it's a bearish candlestick, so that really doesn't count, right? So now we know we want to fully play off this one, right? We want to play off this last higher low. So let me do this. So now when the time of 8 o'clock came around, which is 1500, right? We will want to see what you would have been thinking a buy, right? Most people would have been thinking, even from the strategy that I'm showing you, right? They would have been thinking, okay, once we pull back down here, I'm gonna buy it, which is not, you're not wrong when you're thinking like that. But what do we have to know overall is the higher time frame analysis. Did we ever get back to the 23? Yes, we skipped days and didn't trade a few days, but did we ever get past this purple to get even close to the 23? No. This is probably the closest we came. That's not near the 23 from the fibs. We sold it right there. We came and played around the 50 halfway mark. Kind of got closer down here, but that's not close enough for us to be trying to take the buy at. For me, my bias would still be to sell once we retest the 0, 0, 0. And we are looking at stuff on a super higher time frame, which is the daily and monthly and even 3 months. So once we do pull back, once we do pull back to this 0, 0, I'm looking to truly take a sell to ride the smoke back down to get as close as possible to the first, at least up under the 0. That's the closest, 2 and 3. They try to get at least close to it. So I don't really want to take buys yet. So when we go back to where we were, let me set it up again. My fault. It'll look something like this. We got our little mark it up, boom. And then we have our high, then we have our amigo, which is in the middle. And let's go look at 8 o'clock. So what happened during 8 o'clock? Let me mark this out because I don't want to confuse it. So keep it at 9:30, and then we put it at 1300, just there. Let's go to M15. And I like to look at M5. Boom. So when 8 o'clock started, right? Let me move it to one before it because this is the 8 o'clock. When 8 o'clock started, did we push back here? No, we didn't. So we wouldn't really be looking to take that trade, right? Let me make this green. Or let's make it, yeah, let's make it green. Let's make it green for now. When 8 o'clock started, which is this candlestick here, what do? We chilling, right? Because it hasn't pushed back inside our body. It hasn't. We know that we overall are looking to sell again. I mean, if you're smart, we're overall looking to know the overall higher time frame analysis, which is to sell once we break our what last lower high. I mean, I keep saying lower high, our last higher low on M30, right? That was the last, this was the last higher low. So now we don't really want to take none of this. Could you have took the risk here? Yes, but had you taken the risk there, that's why patience is key. If you would have took that same sell couple days ago or weeks ago, right? I don't want you to jump the gun is basically what I'm saying. If you took the sell here and put your stop loss for 3,000 pips, which is here, stop loss would have got hit, right? So don't just take it flat out at the, zeros or 23s. I'm showing you this stuff for a reason because it's going to help you to be patient, way more patient. And I'm showing you how to break down the actual time frame, looking at different, charts. I mean, not different charts, but looking at different candlesticks, seeing how it play out and waiting on stuff to break before actually taking sales, right? So when 8 o'clock started, let me see my let me see how close then. 8 o'clock started here. Did we break up under the last higher low? No. So we don't really want to fool with it, right? We could have been plotting off the last high, right? All it did was take out, some of these stop losses, blah, blah, blah. For those who are liquidity traders, y'all talk about all that, taking out stop losses, liquidity, grabbing liquidity, blah, 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 before it actually shot down. But for me, my entry would have been something like this. I would have been waiting on this 9 o'clock, which broke back up under our last high. First of all, I'm looking at sell regardless. My overall bias is to sell to get to the 23. I'm looking for this 9 o'clock to break up under our last high from that 8 a.m. to 6 or 5, whatever. And once we retest that high, we also broke up under the 21 moving average. My entry would have been here, right? Or my first aggressive entry would have been here. And then right there, stop loss go what? 3,000 pips. So something like this. And let me make this red. My TP, it's looking ugly. But just remember our entries here at the screen. TP would have been going from risking 3,000. I'm aiming for 6,000. All right. Or if you do want to test your luck and you really feeling super confident and the stuff that I'm showing you, what do we know? We know that we can actually ride this mug back down to where at least halfway, it took a couple of days. This is why I don't hold my trades because it goes all the way down and comes back up, then it goes all the way down, then it comes all the way back up, and then eventually it hits our halfway mark, right? This is why I put the halfway marks on because sometimes big moves will happen from this halfway mark, right? But overall, we know we are looking to get down to what? Let's go on the higher time frame because it takes so long. We are overall looking to get down to what? Our 23 still. So we could have been holding this trade for the longest. You know what I'm saying? Yes, it's getting a little sloppy, but we took a good quality trade set up here, and now we just holding it throughout these days because we know that we have to push back inside the body as far as on the daily, right? I don't want to confuse you guys, but basically we pushed back inside the body, and when we did that, we came close to the 23. So eventually I would have been saying to myself, okay, I can get out this trade now because overall I know that buy is still going to happen from this 23, right? So let's go to H4. So now our good trade setups would have been, I'm gonna delete this. And if you got questions, just ask me, bro. I'm not telling you how to trade, what to do. All I'm showing you is free game. Like, take it. I'm not telling you do this, do that. I'm just showing you and getting your minds, thinking about how to take more of a better quality trade setup versus trading and losing, doing all this consolidation. Look at this range here. Like this is sloppy. That's a range. Why even mess with that stuff? Wait on these areas, play it between the fibs, and we got this fib. How do we get the fib? From the weekly lowest and highest closing points from the previous 3 months, if that makes sense. If you don't understand that, then rewatch the video over and over until you do understand it. We took some good quality trade setups. Here, we took a sell there. I showed you how to enter the market there. I showed you how to enter the market here as well. And we wanted to get down to where at least close to this 23. Our first TP areas could have been back at these purple marks, which would be here. You know what I'm saying? Or back here again when we pull back up here. First TP area. TP, second TP could have been down here. So you could have still been, like I said, depending on who you are, what type of trader you are, you could have been holding this, sell even when it did pull back. If you kept the same stop loss on, I know for sure I wouldn't. I'm not that brave. I'm not that confident. I would have just took my profit at that first TP, and then got in again when it did pull back because we haven't got fully down to this close to this 23. So when we did pull back up here, I would have took another sell, right? Boom. Once we start to see that this 23, look what happened when it did come close. It's shot all the way back up, closing above our 0 from the last previous 3 months, right? This is just time frame correlation. I don't want to confuse it, and it's my first time explaining this to anyone, right? I haven't really been able to practice this stuff to explain it to anybody. So just bear with me if you don't understand. Rewatch it if you do need to. But we clearly see that at the end of this month of April, we closed above right there in this area. We closed above our 0 mark from the Fib. So what do we know that we want to see happen during the month of May? We will want to see it pull back inside our body, right? Somewhere find a level of support. Why? Why are we looking for support now and not sell? Because we came close to the 23, and basically our last 3 months, this is a bullish candlestick. If we look at the last 3 months, it's a bullish candlestick. So now our overall TP area was always up here, right? So now we truly want to start looking for buys now. Boom. So once we pull back inside the body, we'd be looking to take this buy and hold it possibly, but not truly hold it. It's just a more of knowing the overall higher time frame analysis, right? So let's go back and look at it again because I'm gonna mark this out. So now we're looking for a trade during the time of May. And this video is getting long, and I don't want to confuse anybody. During May, it should be here. We actually started above. Do we really want to take this buy at the 0? Do we really want to just take this buy at the 0? No. Why? Because we gotta think about it on a higher time frame, bro. Think about it on a higher time frame. Look at this April, right? April. Let's go back. And matter of fact, I'm gonna keep it on H4 because I think I have another Nas. Yeah. So let's look at the month of April on monthly. April was where? What was April? April is this candlestick. Yes, it looked ugly, but is it bearish or bullish? It is bullish. So we know that we have to pull what? Back inside the body, or for this one, back inside, probably the candlestick or the body. And overall, we are looking to do what? Buy this mug still. So when you're looking at it on, what is this? If we're looking at it at here, this is not back inside the body. That's just a small move. Not that one. We started here, we open there. This is not enough pullback inside the body, which the body was all, at least here, back at least back to this last low. I mean higher low, right? We want to see at least pull back there, but eventually we know that we want to start at least taking buys once we break back above this area, right? We back above it, closed above it. So now I would have took buys here. Stop loss probably would have got hit because of probably news. But basically, this all in between this area, I would have been trying to buy, right? No telling what happened. It looked like it's the beginning of the month, May 9th. And we know a lot of reports drop at the beginning of the month, but we got another confirmation as well with us being above what 21 moving average. Boom, we were riding above it, so I would have been looking to take another pot. So basically, I don't want to break it down. I mean, I can quickly shoot, bro. We can quickly do that breakdown. Let's look at it real quick on small time frames. But I know overall we are now trying to ride our buy back to the 27 extension. Go to M30. Like I said, this one looked like it might have been heavy news. Come on, bro, get off the screen. So we want to lock in on this area and try to get our buy. What do we do? Same stuff, bro. Same stuff. We find 9:30 because we want to lock in on at 10 o'clock. You look at the bottom, it's 10 o'clock, but it's actually 3 a.m. And we want to lock in on 1300, which 1300 is here. So now what do we do? Boom. We putting this line at the high. We're putting this line at the low. And basically you can wait on either the high or low to break since we are at this key level. But this is the opposite of what I showed you guys earlier. So now we know it ended bearish. It was more of a bearish push. So what do I want to do? Is find the last bearish lower high, which would be here. This is, yes, it made a lower high, but this is the last bearish lower high on M30. We can go to M15 and try to look up under and see if we see any last lower highs, which would be all this area super close to each other, right? But it really doesn't matter, right? So what do we want to do now? We will either want to get in early, and this is we still want to wait till 8 o'clock, boom, which is pushed directly off our 0-0, which for me, I probably would have took it because of the experience and the knowledge that I have when it comes to news. I would have, but I'm pretty sure you guys, especially us, we above this 21 moving average on M15. Let's look at it on look at it on M5. We also above the 21 moving average on M5 as well. I would have took my risk here, but I know a lot of you guys would have been looking for it to come back and retest here, something like this. But it didn't happen. You know what I'm saying? It just skyrocket because news sometimes, yeah, you might miss it, but you can also try to get back in it. Like you see what happened. It pulled back down to our same area, came close to it, right? Came back inside our 0 area zone, came back to the last, higher high, right? And then once it pushed off of there, in this area, it just took off all the way back to our 27. I'm not even gonna zoom out, but I just want to show you guys a little bit of how I'm trading and what I'm looking for. I don't want this video to be too long, but yeah, if you have any questions, you can drop it in the comment. I also post my Telegram most times in a bio, so just pay attention to that. Or what is my Telegram? I don't even know. I think it's just simply Deontay Mary. I haven't been on Telegram in so long. Yeah, Deontay Murray, Deonta. Last name Murray at CEOMURR. Reach out to me if you have any questions. All I wanted to do today was just show you guys simply how to take better trade quality setups. I only want to trade what in these areas of 0-0. 23, had it pushed all the way down here to 38, I would only want to trade during the 38. Could you trade at the halfway marks? Yes. Let's look. You could have traded at, let me delete this orange. Could you take trades at this? Yes, you can, but I don't really want to take that risk anymore, right? I don't want to fool in between this. I rather take the sells right here because I know we have to pull back inside the body on a higher time frame, take another sell, and then once we got closer to this 23 right here, especially saying that it broke and closed all the way up here, right here, for the end of that month, I know that this month got to do what? Push back inside the body somewhere, which it pushed clearly off this halfway mark. That would have been a good buy that you snuck away. And then what happened after that? We start to break back above our zero. Could have got in right here. Stop loss goes, 3,000 pips. And I don't even know if I did the stop loss on this one, but it was a winning trade regardless. I know it was. But all I'm showing you is how to take more of a good quality trade setup versus fooling around outside of stop loss good. It says 3,000 versus 2,000 right now. 3,018. I'm taking this sell during the time of, I'm taking this buy during the time of 8 o'clock. 8 o'clock was here that I'm on. Let me move it to the left. So entry right there, or waited on this entry right here to come back inside the body, or we could have took the entry when it came and broke the top. So we broke the top from that 3 a.m. to 6. We broke above it, didn't even pull back until later on throughout the day. So my entry could have been here, still risking 3,000 pips. Boom, whatever, it could be 2,500. This is just from back testing and seeing what works and what doesn't. 2,500 to 3,000 still works. Or even if you're just not super confident in some of your trades, lower your risk size, break it in half. For me, I probably would have used a 0.05, you know what I'm saying? 0.05. Pull out your calculator, right? Pull out your phone and do the math. 3,000 pips give your trades enough room for me because I'm not saying I'm perfect, but 3,000 is enough for me to make a decision to know if I'm right or wrong. For you, you can put it at 6,000, right? You can double it. It doesn't matter. You can put it at 10,000. Whatever you do, make sure you take your lot. So say, for instance, if it was me, I'm trading now, I would want to use let's just say 0.50. 0.50, right? Times that by 3,000, because that's my stop loss, means that if I took this buy at this area, at this green, which was the high that we, broke out of super hard and it came back. And when it came back, I just had my, buy limit sitting there. Stop loss would have been at 3,000 pips, which is somewhere around there. And I'm using a 0.5. I'm risking 1,500 if my stop loss gets hit. You know what I'm saying? My stop loss would have been all in this area, right here. I'm risking 1,500 out of what a funded account, live account, whatever it may be, to gain basically 3,000 if I'm using 0.5, right? If I'm risking 3,000, I want a 1 to 2 at least. So I want to see the 6,000, right there to the right. 6,000 to gain 3,000. You know what I'm saying? If I'm using 0.5, I can be using on a 1 lot, risking 3,000 to gain 6,000, or I can be using a 10 lot, risking 30,000 to gain 60,000. Nothing changes. It's just the lot size that changes. The trade is still the same. Be patient, wait on this area, right? Or like I said, during the time of 8 o'clock, most of us probably would have been looking at, that buy here, but we have a lot of confluence as far as M15, we're above the 21. We know we're looking to buy from this 0 anyway, so we are at it during the time of 8 o'clock a.m., 8 o'clock, what is this, M15? So 8 o'clock, 8:15. That 8:30 was news, took off. I'm already in it. For me, I'm jumping the gun because I've seen this stuff done many a times. Even on M5, we're above the 21 moving average. As soon as it even touched the moving average, I'm taking it buy. We were in a good area to take it. Or I could be more of a patient trader, waiting on it to come back since we broke it here, waiting on it to come back, take it there. Or even if I missed a trade, right? Pull back, as soon as it started to break above this moving average here, it's the same stuff, bro. Nothing changes. As soon as that first bullish close above, back above the moving average, boom. Let me delete this one. So as soon as that bullish close above this moving average after it just rejected our area, boom. Stop loss go 3,000 pips. TP goes 6,000. That's a winning trade. You probably could have got a 9,000, 1 to 3. Good trade, but overall, we know we are looking to what? As far as higher time frames, we're looking to go to our 27 extension, which is all the way back up here. You know what I'm saying? We're taking it by. That's easy trading. I do this stuff almost every single day, depending on if I'm on like US 30, depending on if I want to scout or not. You know what I'm saying? Like it's even the stuff that I showed you on M30, like let me see what happened today. So that is not true. US 30. I don't want to confuse you guys, but it works. Go back and retest it, bro. Go back and retest it. Try it on go. Try it on whatever you know time frame you looking at or you mainly looking at. All you want to do is focus in on the higher time frames to correlate with the smaller time frames and taking only good trade quality setups. All right, I'm gonna end this call. I just wanted to show you a little bit of what I learned these last 3 months. I gave you my contact information to reach out to me. Hope you guys enjoy, and may God bless you, your family, and everyone that you love. Take care, and I'll see you guys later.